has looked like in terms of various crucial economic indicators today, pure economic facts and why and how they went wrong.
The year 2008 started on a very optimistic note. Sensex scaled the 21,000 mark, and of course the talk that 25,000 could be not far was of course coming to be seen as a possibility. But then of course the inevitable happens. IIP falls 500 basis points. Analysts read it as an aberration. Of course the rupee, which was trading 40 to a dollar, of course RBI keeps the policy rates unchanged. And that's when the trade target not to be hurt by global slowdown is what RBI stated, but that was not what actually happened. April is when the inflation touched 8%. CRR, of course, was hiked by 25 basis points, as seen that the demand pull inflation was the key factor for the inflation rising. This first quarter GDP also went below the 8% mark, something which was not, the government was not used to seeing over the past 4-5 years now. Of course, that's when the inevitable happened as far as August is concerned. Inflation peaked to 12.91% on the supply side factors, including commodity prices. August IIP came down sharply to 1.3%. That was a sharp drop in the last 5 to 6 years. That's when, in October, the government stepped in to take in policy measures. And of course, that's when we started seeing aggressive rate cuts happening across both the CRR, SLR, and of course, the repo rate. IIP again contracts for the first time in 15 years, and that's when the government really sees it that there's more to be needed as far as the policy measures are concerned. Of course, we saw export growth also turning negative for the first time in 5 years. So all pointers indicating to a general slowdown and a recessionary trend coming in as far as the economy is concerned. But then again, the aggressive fiscal measures by the government steps in. Inflation cools down by over 600 basis points from August high on the back of falling commodity prices. And of course, government comes in with another stimulus package in the form of a SENVAT cut that of course cuts in product prices across the board by 4%. Rupee hits an all-time high of 51.81 to a dollar. That's when we see the rupee immediately changing a trend within the next 4-5 days. That's when the dollar starts weakening against the other currencies. And of course, on the back of it, we see aggressive monetary policy measures. That's what's expected as far as the year end is concerned.